Hello everyone, today we're going to talk about Bitcoin. And let me remind you that in the previous review, I mentioned that there's a chance we could reach the area of $110,000. So today, let's see whether those chances remain or if the market situation has changed. Let's take a look at the chart. There are a lot of levels here. Let's start with the farthest, the very lowest one. I'll grab some drawing tool, make it bold, make it yellow so it's high contrast, and then delete it carefully. Here's the key level from which the $60,241 level is drawn. Here we had a false breakout, after which there was a deep drop to around $30,000, 29 or whatever it was. After that, the growth began. And notice how long the price traded near the $60,000 level. It broke through, tried to go down many times, and there were even a few breakdowns. In fact, Bitcoin went below this level 3 times. But each time, the 5-week moving average held us up. This is a weekly chart, and we moved upward. Accordingly, this is a very distant but very important level. Now let's take a look at the situation from a closer perspective. Look, we have a level from which a deep reversal started. This is the level of $104,464. Notice that last week, which closed just 2 days ago, dropped very deeply to around $99,000, even a bit lower, but still closed above $104,464. So if you don't see it, let me show you. Here it is in a larger view, you can see it clearly here. Accordingly, as long as we are above this level, as long as the 5-week average hasn't been broken, the chances for upward movement remain. But let me remind you that this is already the first, second, third, and now the fourth time we are breaking through the 5-week average, even if only with the candle wicks. And this is a very dangerous situation, indicating that Bitcoin could go either to the level of $94,000, or to be precise, $93,738, or to the 100-week average, and potentially to the area of $78,000. Here, around the 100-week average, it makes sense to draw another level for this local reversal. Let's do that. Look, it passes through 86,000. And strictly speaking, this average, well, in dynamics, is pointing somewhere in this area. So, if we see a decline over the next few weeks, then the 100-week average will come to around $86,000. And at that point, it will be a defining level, right? Whether Bitcoin will go further down or not. But the probability of reaching both 94 and 86,000 is quite high, due to the fact that this is the 4th attempt to break through the 5-week average. But these are large time frames. RSI, by the way, is currently pointing down, but it's in the zone of uncertainty. Let's take a look at shorter time frames at the monthly candles to see if we have a chance to reach $110,000. I'm removing all the markings and drawing your attention to the fact that these are monthly candles. I mentioned that this sideways movement, which lasted for 4 months, has a higher probability of breaking downward, with the first target at $102,000. We've already seen that. And the next target is the base of this trading range, which is again $94,000, just as we discussed earlier. So the monthly candles at the moment, there is still a long way to go before the November candle closes, are indicating a continued decline toward the $94,000 area. Next, it is important to note that we have a double divergence here, and that the month of November is currently, at this point in time, trading below the bodies of all 4 preceding candles. In other words, the monthly candles are pointing toward a decline to the $94,000 area. And the weekly candles overall also indicate that the risks of a decline are high, but so far they haven't flipped the switch that signals the decline has actually started. It feels to us like a crash has already happened, but in reality it hasn't even started yet. Now let's take a look at the daily candles. What do we see on the daily candles? I'll remove all my markings here since we don't really need them at this point. Pay attention to the following things. We've broken through the blue 300-day moving average, and right here we've also broken through the 200-day moving average. Yes, there were many attempts to break through it, but what's very important is that we've moved a significant distance away from this moving average, and as a rule, the first attempt, or rather the first actual breakout of any moving average, usually leads to a retest from the other side. We broke through it from above, and now after we've moved away from this moving average, we should retest it from below. Essentially, this means we are looking for a confirmation by testing the moving average from underneath. And based on this alone, plus a few other factors, I expect the price to move here to the area of $110,500. So, if I were to draw my expectations as a trajectory, it would look something like this, here and then here. So for now, this is the scenario I see. Is it possible that we could go straight here? Yes, that's possible, but I consider it a secondary scenario. The main scenario is still a move to the area of $110,000. Moreover, a rise to around 110,000 will create the impression that the market has spread its wings and is ready to go up again, and that will serve as fuel for a drop. But I emphasize the risks of a decline on the weekly and monthly candles are very, very high. Trade carefully, leave your comments, and subscribe to the channel. All the best. Goodbye.